Alright, let's begin the second chapter, Methods of Money Laundering. It's gonna be quite long, so enjoy it with cup of tea, cup of coffee. So I'm going to share with you different ways of doing money laundering. So the first one is structuring. So what is structuring? So in the USA, or maybe another country also has similar regulations. If you do any transactions that exceeds $10,000, the financial systems needs to create a report, and this report we're gonna use will gonna be used for tracking the money. Right? So structuring is basically when a person breaks down large amounts of money into smaller deposits that less $10,000 to avoid triggering these regulations, which is regulated under BSA regulations that we are going to check on the next chapter. Okay, and usually they do this by using another person's to do the transfers in different branch, for example. So let's see, on the right side is a study case of real example of structurings. Medical doctor convicted of federal structuring charges for making cash deposits to avoid federal reporting requirements. The doctor name is Bryans, made a deposits of less than $10,000, and the purpose of concealing income he received from thousands of prescriptions that he issued for these and these patients. Alright, that's crazy. Next, bulk cash smuggling. It's hiding large amount of cash on the persons, in the luggage, in the vehicles, boats, or cargo, and moving it to another country with strict bank secrecy laws or with minimal anti-money laundering controls. So basically, they actually literally smuggles the money, right? This is the case. Arizona man found guilty of bulk cash smuggling. Guilty of attempting to smuggle $200,000 in US currency into Mexico. So Mexico might be a country with minimum anti-money laundering controls. Maybe. So he smuggled the money inside a vehicle, right? Next, money orders. A money order is a payment instrument issued by a financial systems or postal service. Maybe you're familiar with Western Union in your country, so you can go there and ask them to send money to someone else, and then you will pay the fee. So basically, this is their services, and these services can be exploited, especially for USPS, because they are reliable and protected against warrantless searches. It means that if law enforcement want to search, want to conduct investigations, they have to have the paper of search or investigations. And this money order can be bought in higher denominations, making them lighter and easier to smuggle. A study case. This is an illegal Casa de Cambio launders more than 5 million, and the investigation concluded that money orders were received. Right, so they use money orders for laundering process. So wire transfers. Well, wire transfers is a part of layering process, as I said before. They can transfer the money into different accounts to make it harder to track, to confuse the law enforcement, right? By moving the money around into another countries, another account, something like that. Trade-based money laundering, TBML, right? TBMLs involves hiding illegal money by disguising it as a trade transactions. Criminals falsify the price, quantity, or quality of goods to make their illegal money look legitimate. So they hide the money into trade transactions. We are going to see three types of TBML. One is over and under invoicing of goods. Two, black market peso exchange. And the last one is underground banking systems or Hawala. They are other types, but we are going to check these three, okay? Over and under invoicing goods. Over invoicing is selling goods for higher than their worth to move extra money under the guise of legitimate sales. And the opposite is under invoicing, which selling goods for less than their worth, so the buyer can later sell the item at market value and claim clean profits. So let's see an example. Okay, so this is based on the true event. There is a criminal organizations. They export a small shipment of scrap metal, but they falsify the reports. Right? They tell that, oh, this is weight several hundred tons, but actually not. So they prepare everything, every document, fake documents to support these transactions, these fraudulent transactions. But unfortunately, the Canadian customs noticed this. He noticed that, alright, if this ship is that much weight, why the hull of the ship is still well above the waterline, right? So after the examinations, there is a discrepancy between the reported and the actual weight of the shipment. So it is assumed that the inflated value of the invoice would have been used to transfer criminal funds to Canada. Now let's see black market peso exchange, right? Black market peso exchange. Why it calls peso exchange? Because usually this kind of transactions happens between Colombia or Mexico that use peso to USA, right? But the concepts can be happening in another part of the world. So imagine that there is a drug cartel in Colombia. They smuggles the drugs into USA, and the drug dealer sell the drugs and they get the USD. They have to find out how to send that USD back to Colombia, right? So they will connect with black market exchange, peso broker. They will sell the USD that they got from the sale with a discount. They will sell it under the normal exchange rate. Okay, and then the peso broker with its connection in Colombia will send the money from its account in Colombia to the drug cartel's account in Colombia. So the involvement of drug cartel stop here. But how this peso broker will get the pesos back, right? So the US dollar that they got will be placed into legitimate system, financial system like bank, using maybe structural transfer, and then they will try to find Colombia importer that will conduct a business in USD, right? So as a Colombian importer, they will do the transaction in USD, so they are looking for a broker. Of course, this broker will offer much more cheaper rates, so this Colombia importer will be interested. So so the Peso broker will arrange the payment for the importer, right? And then so the exporter will get the payment from the broker in USD, and the goods are exported, and then the importer will pay the peso back to the broker in Colombia. All right. So the actual money doesn't move, stays in USD, it stays in Colombia. But there's a trade, this kind of trading that makes happen to circle around the funds. Okay, next is underground banking systems, or usually it calls Hawala, or in another country usually calls in different name. So how it works? So it's an informal methods of transferring money without any physical money moving. It is totally unregulated, completely void of any reporting requirements. It's basically based on the trust, right? This process is already exists long time ago, when there was no bank, right? But this can be exploited for money laundering. So, for example, of how Hawala works, let's say I want to send money to my friend in another country. Okay, so what I'm going to do, I will connect to Hawala there in my country, give the money, and I will share with him who will be the receiver and the unique passcode. So the Hawala there will share the transaction details to Hawala there in the country B, and Hawala there B will give the money to my friend after she confirming the passcode. Of course, the amount of money will be deducted with the fee, right? And now Hawala B so now Hawala A needs to pay back to Hawala B because the money is in Hawala A and Hawala B actually doesn't have money. So how they solve it? They can solve it in multiple ways. For example, let's say if Hawala A has a debt to B, so it can be counted as a debt payment. Or they can do like under invoicing or over invoicing, or they can layer the invoice or whatever. But basically, multiple ways that can solve the payment. Alright, next is correspondent banking. So basically, it's something like this. You want to send money from Indonesia, let's say, to Jamaica. It's a long transfer. You use a bank in Indonesia, but Bank Indonesia doesn't have a direct connections with bank in Jamaica. So they need to find connections, another bank that might have connections to Jamaica. So in one transfer, it might have multiple banks involved, and then finally can transfer the bank to Jamaica. So the problem here is that the middle banks, they might not have a strong AML policy regulations. They might not have the knowledge on who is actually sending the money. So that can be a risk for money laundering. Alright, so this is that is what this slide is all about. So on the right side, you can see an example: financial crime through correspondent banking. Alright, another financial products. First, online bankings. It can be exploited because banking with online services sometimes has lack of verifications of account information, which can be exploited. Credit cards. So actually, there is less often of money laundering case involving credit cards, but technically it can be done by, for example, prepaying the account to be refunded with credit cards, or use stolen credit card for cash advances. ATMs. The complexity and less stringent check in the multiple layers of ATM ownerships and leasing can be exploited for money launderer to buy the ATM machines, right? So apparently you can buy ATM machines to do ATM businesses, right? I just knew that after reading the books. Cyberbanks. Cyberbank is a bank that doesn't have offline buildings, so it's only online, like digital banks. And many of them are unregulated and unprotected. And prepaid cards, right? Like e-money, or like in Japan it's like Suica, right? Because it is anonymous, and then we can transport the cards easily to another country, so it can be exploited also for money laundering. Okay, I think this is last, I hope. Cash intensive business. So business that dealing with cash intensively, right? That experience a high volume of cash flows, basically. It doesn't need to be cash, but the cash flow is intensive. So this type of businesses are often used for money laundering and terrorist financing, because cash-based transactions are inherently very difficult to trace. Because again, the amount of the cash in the business, right? That's why, if you remember the example in the first chapter, right, about the 10 corruptions, it used the exchange company for layering because of this reasons. So let's see an example. First example of cash intensive business is insurance. This is how it can be done. Illicit funds are used to purchase policies, okay, which are then cashed out early. All right. So if the law enforcement want to track it down, they will find out, oh, this is from the policies. Another tactic is overfunding a policy, right? You pay more than it actually needs, right? Or borrowing against it shortly after a purchase. The next example is from autos. Cars bought with illicit funds are sold abroad for a profit, or sold by dealerships that falsify the transactions report because they want to hide the origin of the funds. And last, real estate. So money launderers may use the complicit appraisers to undervalue the properties So they are playing with the prices and allowing them to secure banks' loans for the purchase and repay them with illicit funds. And then later they sell the property at its true market value to get the profit. Yep, that's the last one for the chapter 2.